Hi, this is Zach here with the weekend edition of the Bulletin Board Heroes. It is Sunday, the 5th of March. Starting off with the FTSE 100, but there was good consolidation over recent days between around the 78.50 and 79.50 levels. We were looking for 78.80 as support, given that that was the initial January resistance. So it sort of worked. Uptrend line there from October. That's currently around the 79.20 level. Above that, we're looking for the index to progress within a rising trend channel towards 8,200 as soon as the end of this month. End of day close or a weekly close is what we were looking for above 79.50 or 79.60 if we're fussy. Didn't quite get it on Friday, but presumably we'll get it early next week. Double bounce for the RSI on the neutral 50 level. That was a help and a boost. And as I said, 8,200 possible by the end of next month while we hold above the 78.80 area. Below 78.80 risks down to the 50-day moving average around 7,800, but not expecting that now after recent consolidation. On to the DAX, which if anything is looking rather more sprightly than the FTSE. We had an unfilled gap to the upside on Friday, closed basically at 1 month resistance or near that area, looking for the first September resistance line there around 15,900 as a target over the next couple of weeks. And then the big picture target maybe by the end of next month up to 16,700, which is effectively the top of that rising September trend channel. On the downside, early really sustained price action back below 15,200 or 15,100, depending on your taste, and earlier break of the 50-day moving average around 15,000 really questions or even begins to question the ongoing rally for this market since the beginning of October. Onto the Dow, which has been slightly painful in terms of the contrast between it and the FTSE and the DAX, but Friday looks like it may have resolved the whole picture. It's normally the case that if we bounce above a 200-day moving average, that tends to be a near-term buy signal. We did that on Wednesday. We did that back in December as well, and that led to a rally towards 34,000 and a bit more. This time we're looking for the same kind of result, maybe even better. We've got a 1-year resistance line there from back in March last year. Above that, at 34,300, the target here is high as 36,500. I suppose one would be looking for that by the end of next month, but at least for this month, it would be good just to clear that 1-year resistance line and the 34,000 or the low 34,000s area. If you are cautious, maybe wait for an end of day close above the RSI 50, which we just missed on Friday, and above the now rising 50-day moving average of 33,500. But that rebound, a sort of confirmed rebound above the 200-day line, which is now rising, should mean that we've seen the worst of the recent sell-off. On to Bitcoin, which looked as though it was ready for action towards the 30,000 zone, but last week the Silvergate scandal struck, and we've got this market now basically on a line of support, neckline support there around 22,100, so it could have been worse. And we're looking really for this market to give us an end of day close above the rising 50-day moving average at 23,000, or perhaps if you're fussy, the top of that gap down 23,200 to then resume the possibility of a move to the upside. But if you're a fan of Bitcoin, that uptrend line there from January would be the support area to hold on to. Below that, it's down to 19,700 and the 200-day moving average. Break of 25,000 on an end of day close basis. We're looking at 32,000 now as soon as the end of next month rather than this month because of that gap down that we had during the week. On to the small cap stocks, and starting off with Active Energy, which has had its third unfilled gap to the upside now. We had one in January, one in February, and one to start March. So this looks like it's could and should really motor. Initial target here up towards 8 pence at the top of that rising trend channel. After that, we'll look back and see what the resistance on the way down was, but probably looking then towards the that gap back in December 2021, around 9.5, nearly 10 pence. So a very strong looking picture there at AEG. Ideally, there's no end of day close back below the low of Friday at 5.36 pence, but great setup there. On to Cizzle, which is really beaten expectations, well, at least some expectations. We had an initial target there at 2.2 pence, the next one at 2.8, and then the third target there at 3.8, which was hit on Friday. In fact, we went to 3.95. What we're looking for now, after the second re-rate of a target, is an end of day close through basically 4 pence to give us 5.5, which would be a September 2021 resistance line projection. So let's see if we can do that. The ongoing upside valid while we hold above initial March resistance around 3.2. So above 3.2, looking for 5.5 on Cizzle, and hopefully a lot more. Onto Coro, where there's some informed speculation about the stock, and there's also been a break of that November resistance line that was around 0.25. Above 0.25, we're looking for a move towards the 200-day moving average at 0.29. Big picture target over maybe the next 1 to 2 months, as soon as the end of next month, as high as 0.44, which is the top of that June rising trend channel from last year. But in the meantime, just looking for the upper 20s while we hold above the 0.25 pence position. On to Chill, which is a stock which has taken a lot of sort of stick from the bears, but here we had at the end of last month the break of that resistance line there around 3.75 pence. Shares making good progress towards 5 to 5.5 pence, which is the top of that broadening triangle from April last year. So maybe 5.5 pence also tying in with the top of that gap from April last year. At this stage, only well below 3.5 pence. And that broken resistance line really delaying the upside scenario. On to OKYO Atlantic, which had an inside day breakout on Friday, which technical analysts will know is obviously always very exciting. The high of Wednesday at 21.5 pence. Above that, we're looking for a minimum of 24 pence, and ideally the 200-day line at 27 pence over the next couple of weeks. We've got the rising 50-day moving average as well as a rising trend channel from November, so looking quite healthy there at OKYO. Moving along to Gendrive, which has had a bit of a wobble of late. We spiked up towards the 40 pence area, came back to 21 pence, so it was a bit of a white knuckle ride, but the view now is that the longer the shares remain above that resistance line there from July at 26 pence, the greater the chance of a retest of the 40 pence area as soon as the end of next month. Early sustained price action now back below the 50-day moving average at 19.5, really delaying the idea of another go at the upside. Moving along to Guild Esports, and here you can see that there have been some signs of recovery here. The old support for the shares around 1.2 pence. We just fell shy of that on Friday. Want to see an end of day close through the 50-day moving average and that September resistance line projection above the 1.2 pence level, looking for 1.8 pence as soon as the end of next month, completing a potential bear trap there at Guild Esports. Oncimmune is next, and here you can see shares have managed to bear trap back above the old 41 pence December low. Above that, we're looking for the 50-day moving average of 58 pence initially over the next couple of weeks, and then by the end of next month, potentially up to the upper 70s. But let's wait for the 50-day line to be hit over the course of March before getting too excited. The reason for the relative excitement is the way that we've had a lower low for March, but the RSI was higher, so that bullish divergence and the gap down could give us a pretty strong turnaround on Oncimmune. On to OKYO Pharma, and here a bit of a bear trap there below the 2.5 pence level, and that has meant that on Friday we had a push through the 200-day moving average just around 3 pence. The longer we stay above 3 pence, the greater the chance of a move back towards initial resistance on the way down around 3.75 pence over the next couple of weeks. If you're cautious, you wait for an end of day close for the RSI above neutral 50 to join with that break back above the 200-day moving average, which was delivered last week. Just a few stocks to go now. First one is Petrometad, and you can see that shares broke that neckline resistance there around 3.2 pence. Above that, we're looking for resistance on the way down towards 4.5 pence, perhaps as soon as the end of this month. We had a nice break for the RSI back above neutral 50 on Friday, so that might give people the confidence that 4.5p could be on its way over the near term. Stock which certainly delivered on the upside at the end of the week was Panthera, not only hitting the initial target we had here at 6p, but actually then hitting the best case scenario target there around 7.5p. In fact, we hit 7.5p on the nose. The next target, if you're still keen to pursue this situation, would be a resistance line there from June last year. That's heading for as high as 9.5p, so 9.75p, and we could see that by the end of next month if we get a quick break back above the 7.5p level. Obviously, we fell back a bit after spiking through that particular level, but through 7.5 up to 9.5 by the end of next month. Not quite so dynamic is Plexus, and here we bounced off the 200-day moving average at 2.55p. Above that, we're looking for a retest of the 3.3p area, and then ideally up to 5p by the end of next month. Only back below the 50-day line at 2.3p, delaying the upside scenario. On to the last two stocks. First one is Savannah Resources. And here we had a clear break of that resistance line and the 200-day moving average on the same day, 2.9p there and 3.1p there on the resistance line. Above 3.1, we're looking for the 4.5p zone, which was basically resistance on the way down. If you're cautious, you wait for an end-of-day close through August resistance at 3.75 before targeting 4.5p plus. Finishing off with Woodbois, where it's interesting that we're seeing sort of the play out between the seller being out of the stock and the shares starting to move higher. Nice turnaround there with the break on Thursday above the 50-day moving average. That's around 1.6p. Above that, we're looking for at least 1.9p at the top of that December triangle, backed by a bullish divergence line which has been in place since December. This stage only well below 1.5p, really questioning the turnaround there at Woodbois, which after the hit the shares have taken since peaking at 9p last May, it seems to be somewhat overdue. That's it for me today. More updates during the week.